Hi traders, this is my introduction to the stock scan service that Trade the Easy Way runs. Has just launched. We've trialled it, shown a lot of members how this can work and how they can use it, and now it's formally launched as a very modestly priced service. Now, stocks I think should be a very important part of your trading and a central part of your portfolio, so that you can really spread your risk and make use of what is a very dynamic market. I mean, if you know how to pick US stocks, when US stocks move, they can move very well. Unlike some of the European markets, where some of the stocks are, I think, are a lot tougher to pick. The US market is where the volumes is, the liquidity in the US stock market is just about the highest there is in the developed world. So if you're not trading stocks, then you're missing out on opportunities. Sometimes forex can be tough, can be in ranges and very hard to make money out of. At the time when stocks could be moving out very well. So the idea of this stock scanner is to offer you a service where we've gone through a specific criteria. We generate a list using that criteria, and then we are helping you select stocks from that list that you might be interested in, and we feel is a good probability that you can make a decent amount of money from. And we talk about entries and exits and all the aspects of managing the trade. Let me just show you a spreadsheet. This is the current spreadsheet we're sending out today. This is the ticker list down here. You can copy and paste that into your platforms like TradeStation. This is the actual title of the company. This is the average daily volume. It's all part of our key criteria. The PEG, the PE ratio, I'll go over in a minute. And they're all a certain size. We don't want to get into illiquid stocks. We want very liquid stocks. And then you can see this is showing, this column here is price breakdown. This column here is price break up. So depending on where the markets are at the moment, at the time that these lists are going out, we will suggest longs or shorts depending on where we think the markets are going. So we're trading very much with the trends of the markets, not against them. We want to do good trend trading. Now below in the scan list, these are the bellwether stocks. These are key Nasdaq stocks, key Dow stocks, and key S&P future stocks. S&P stocks, I should say, sorry. And so these are good to have in your platform to skim through to see how these are performing, so you can see the underlying strength or weakness in the market. So PEG and PE ratio, we've been very specific about some of these PE ratios is price earnings ratio. So the higher the ratio, the higher the price of the stock. So you've got to be very careful with something that is like this price line here, 48.8 price earnings ratio, PE ratio. That's very high. So, but the PEG ratio, the lower the ratio, then the better value potentially the stock is. So it's a balance. Here you can see a very high PE ratio on PCLN, but a ratio of PEG of under 1. So it shows you that the market, the way it's priced, the market believes there is still great growth potential despite the fact the PE ratio is so high. Now let me give you a definition of these PE and PEG ratios. You can see here a little formula. So it's price earnings, sorry, the PEG ratio is price and earnings, that's the PE ratio, over annual EPS growth, so over the expected growth. So that's where you get the ratio, and if I'll send you a link to this, but let me just read you what it says. It says it's a widely used indicator of a stock's potential value. It's favoured by many over the price earnings ratio because it also accounts for growth. So it's a good indicator. So like that PCLN, it's a good measure. Similar to the PE ratio, a lower PEG means the stock is potentially more undervalued. Okay, so it's a widely used ratio that is very good to try and get a hold of the potential ratios of the stocks that you're looking at. Right, now let's look at today's list. And this is For those of you who are not subscribing, this is the last time you'll see this service. If you want to get involved in this service, then email me and I'll send you the details. So first up, we've got a stock called RGC. This has come up in our scan out a few times. If we just pull back and look at the general picture of this one, you can see it's got, we're coming into this apex, and all the lows here have been bought. So now we've got a 50 MA break. That's what this scanner is all about, 50 MA breaks. A stopping bar down here, 50 MA break, and we've got resistance up here at 13, and the stock is currently 12.5. So the question is this a good one to go for? I think I'm not going to recommend this one because of the 200 EMA. I wouldn't recommend any stocks we get in front of that. I would just keep that on a watch list. Next one, ABG. It's got a gap. This has not filled the gap. Dollar resistance up here. It's currently 1909. Potential to go to 22 plus. Bear in mind the kind of markets we've had. See, we've seen a lot of stocks are gapped, so don't be unduly concerned about that. At the moment, these equity markets are turning as per the video last night. The daily bar engulfed the previous day's bar, Tuesday's bar engulfed Monday's bar, so it is a good time to be looking for longs, hence the reason why we are looking for longs in this particular scan. ABG, yeah, I do like it actually. I'll tell you why. Because it's closed above Monday's open. The trouble is with it is that it's got to have a very, very deep stop. I think we're going to find that with all these. So I'm not going to recommend you trade it because of that stop. This one has closed right up against the 8, so I'm not going to look at that one. That's HPY. The DPZ, Domino Pizza. That's a good mover. This has had a very nice sort of wedge breakout there. And that's closed right up against resistance there. So we're 25 and we've got the potential to get up to 28 plus. I have to say the cautious trader in me is saying wait until that one gets to 25.7. But I do like it. I mean, it's been a good mover here. So we've had 1, 2 waves and a little third wave. If you're an Elliott wave fan, this is an A. I'm now looking for a B wave. So I do think this has got great potential. The fact it's closed above the 50 and engulfed Monday's action, that's great. A DPZ would be on my watch list, but I would wait for a close above that. Crocs, as in Crocs shoes. Similar, I wouldn't trade it, needs a big stop, and it's got resistance ahead, so I'm going to leave that one. This has had a wedge breakout, and we've got the potential, got a lot of resistance up there at 37.90, 37.34. Trouble is we need a big stop on this one again. You could trade it with just one bar back. I mean, my attitude towards that, if it gets down there, I'd want to be out of there anyway. I wouldn't want to hang around for 2 bars. So if we look, the risk-reward ratio just isn't there, so I think we're going to struggle here. You know, if you can't find a trade, then you just have to face facts that it's not a good time to get into these stocks, and we need to be very patient. So not liking any of these. I'll stop if I like them. Cobalt, oil and gas. Nope, resistance ahead. We're going to have to stand aside. Stand aside of that one. Right, this is interesting. McDonald's, MCD, let's see, it's what else can I do to this one? So I've just put the entry level would be 85.5. The stop would be, to me, one bar. I would go one bar back if I was going to trade it at just under 82.5, and the target, the resistance, is 89.5. The risk reward ratio is not there, so we really are struggling. Now Baidu, this is a good bellwether stock. Massive move. This is the Chinese Google. Massive move to the upside from this stopping bar down here, but too much congestion up here and don't like it. So these charts are very, very similar. Let's look at Apple itself has come up on the list. Huge move up, and we've got a lot of resistance ahead there. Let's see if I just put it slammed into resistance and stopped. You can see how nicely that's come down to support. I think a lot of people would have just bought that down there. Bear in mind, we're in the second half of the year, and already traders have got their eyes on retail related stocks ahead of Christmas. PCLN, Priceline.com. It's been a very good stock. This has been a bellwether of the retail market. So look, as it grinds its way up, prices drop 3 times faster than they go up. So we had a second wave up, another wave down. So we are due a wave up. Bear in mind, this is a retail stock, when I just said about Christmas. But I would, if this can close above here, it's probably one of the best in the pack. If we can close above that 532, sorry, 523, 524, I would, assuming it wasn't too big a bar, I would be interested in that to see if we could break out of that. Because if I just tidy this chart up, and even go back this far, I think the next time it approaches that resistance, I think that will go. It is an expensive stock in many respects. The fact it's $517 at the moment, and the P ratio, if you remember, is very, very high in this one, but the PEG ratio is modest. I think this has got potential, but you may want to avoid this because it's such a highly priced stock. So there's not a lot to go for at the moment. Let's have a quick look at some oil stocks and some energy stocks while we're at it, bearing in mind how well oil performed yesterday. I just want to show you this one, ATPG. This is an oil stock, and you can see this level of support at 817, and yesterday we had a hammer with RSI, massive gap to the 8. Now you're going to need to stop under 6.25, and the entry is 9, so it's a pretty hefty stop in proportion to the price, but the reward could be handsome. Bear in mind, oil is holding up very, very well, $82.50 a barrel as we speak. If we've got the potential to fill this gap at least and go back to 14. So ATPG, I'm going to be a buyer of ATPG. Let's have a quick look at some of the other oil stocks. No, don't like any of them. Okay, so the only other one I found is this one. This is Intrepid Potash. Bear in mind, this is a good time of the year for the grains. I like the way that that's open and closed above the previous Monday's bar and still got a gap to the 8 with the RSI. I think this is IPI. is a good. You've got your stop's got to be under 25.18, it's about 25.10. Your entry is a break of 27.50, so you're going to need a good 230 odd point stop. But your reward, if this one works out, is the potential to break up here. Alright, I like IPI and ATPG, so that's all we've got for you at the moment. That's going to be typical stock scan. If you are already enlisted, congratulations. If you're not, the price is £29.75 a month sterling, or $47 a month, 47 US dollars a month. It will include, so it's 2 scans a week, including 2 videos a week, and so a lot of support to help you select, to get into stocks and help you select. If you want information, please let me know, please contact me. Otherwise, consider what these stocks could offer you, and I hope you find it interesting, and see you again.